What's up, guys and girls, good traders and bad traders? This is Dennis from Pips Matter, and in today's video, I will be going over some trading tips. To begin, let's go with the quote: simplicity is the best way to trade. No doubt. Trading simple is profitable. What do I mean by simplicity? Well, I mean having a clean chart, having a consistent risk management plan, following basic tips, not having a million things on your wall or in your trading station, just keeping things simple. It's going to make you more money and save you a lot of headaches. Now, in this video, I will be going over free trading tips which have helped me win, be safe, and save time more than anything else. Now remember that keeping things simple and treating trading like a marathon and not a sprint is the smartest thing you can do right now with your trading system. Now in this video, I'm going to go over charting, opening of trades, and risk management. Let's head over straight to charting so we get down to business. Now, your chart must be clean. You don't have to spend all day looking at the charts. Just about 30 minutes a day is more than enough. What do I mean by this? Well, since I started working a full-time job, my trading has significantly improved, and the reason is very simple. I started spending less time looking at the charts, and this resulted in me trading less and opening better trades. Because I had little time to open the trades, I made sure I only went inside the good ones. So, you see, trading the markets is, well, it's actually better to actually have a full-time job. Soon I'm going to explain why. But anyway, here's the process that I use. The first thing I do is I locate all key trading levels. These are support and resistance levels. I always start on the daily chart and then go down to the 4-hour. Point number 2, review price action patterns and candlesticks. Now the only price action patterns that I actually look for is, well, double tops, head and shoulders, cup and handle, rounding top, rounding bottom. Not too many of them, just these ones. In regards to candlesticks, well, pin bars and the double reversal candle pattern is pretty much all I look for. Now I always start my analysis on a daily chart and then I finalize it on a 4-hour chart. I just stay between these two charts. And that's it. So I go on Euro USD, I go on the daily chart, clean the chart totally. I locate the key trading levels, supports, resistances, well, vibration levels, and then I move over to the 4-hour chart, add a few more. While I'm doing all of this, I'm consistently looking for price patterns and reviewing candlesticks. Now, the most important thing that I do is I always have a fresh chart. What do I mean by a fresh chart? A fresh chart is me going clean all, remove everything, all the key trading levels, and redo them myself again. It's good to do that at least once a week. Once a week, refresh everything and just keep things simple and clean. Now, I also analyze the chart only 2 times a day. 1 time in the morning, depending on how much time I have, and once at night. In the meantime, when I'm at work having my cigarette break, or yeah, I smoke, what an idiot, or I'm just having a break, then I just check my phone. You know, I just see what's up, what's going on. Sometimes I open up TradingView and see what's going on the trades I have. For example, right now I'm buying Euro JPY. It's not going so well. I'm waiting for a level. If price action continues going lower and breaches this one specific level that I'm worried about, I'm going to close my trades before before they even hit stop loss. That's the rule of cutting your losses small. When you're wrong, just get out. Now, point number 2 is opening trades. Firstly, if there is nothing to trade, trade nothing. Your only focus as a trader is to find high probability trades which have at least a double possible ROI, return on investment or return on trade idea, than the risk involved. Here's what I do. First, open trades which you have fully analyzed. Only open those kind of trades. Don't ever analyze something 30% and say, hey, I'm ready to go in. No, finish the analysis fully, check both chart frames, which is the daily and the 4-hour and whatever else you're looking at, and then enter a trade only when you have enough intelligence. Point 2, Always find a definite exit area. You need to have this because you will be wrong. You can't have every time a winner. You can't be right all the time. So have stop losses, have definite exit areas, and make sure you find them before you enter a trade. Free. Map out all support and resistance levels which might affect your trade. For example, I'm buying Euro JPY. I want to see, yeah, my profit target is 120 pips away, but in those 120 pips, there are resistances that might affect my trade. Know those levels because then you'll be able to kind of, well, maybe get out at one of those levels if you feel that there is that prices, well, finding that level as a resistance. And finally, 4, enter trades which you're comfortable losing on. What do I mean by this? Control your exposure. Don't open a million trades. Don't expose yourself on Euro USD buy, or let's say Euro USD sell and AUD USD sell. It's kind of the same thing. If the dollar is going to go down, if it's going to weaken, you're going to be losing on double trades. So don't do that. Make sure you control your exposure. And finally, we're going to the last one here, and of course, it's risk management. Firstly, do not invest money you cannot afford to lose. Your money is always at risk when invested, so try not to invest more than 20% of your liquid net worth. Now, an important note is also that you guys need to know that trading the markets should not be your primary source of income. Get a job, man. Use trading as a secondary source of revenue. This will help you control your risks better because you will not rush to make money. Use trading as a second source of income. We live in a day and age right now where you need to have multiple streams of income so you can, well, make more money. But if you just base it on trading, I'm telling you it's gonna be very tough for you. Don't do that. I've seen it happen with people. People have taken full-time trading on without even knowing how to trade, having far too many weaknesses and not making any money. And then they freak out. So don't. Get a job. Work in McDonald's if you have to. I don't care. Just get a job. Work, have a stream of income that pays your bills, and use trading as a second source of income that can pay for your holidays, better Christmas presents, maybe a new car, or maybe, well, buying a house or whatever else it might be. The points on risk management is don't ever risk more than 5% on a trade idea. But this is what I tell you. I risk 7.5% on my trade ideas. 7.5% in total. So I might have free trades open of 2.5% or one trade of 5% and one of 2.5. So split your risk that way. My maximum risk at any given time is 7.5% on my personal account. When you're wrong on a trade idea, get out. That's exactly what I just explained recently with Euro JPY. And free, always use stop losses. Predetermined, what we spoke about in the previous slide. Have a stop loss always, absolutely always. Use stop losses. And 4, keep your risk management simple but consistent. What is simple? Well, it's not rocket science. Don't risk more than 5%. Don't risk more than 3%. Don't risk more than 7.5%. Then keep your word. That's simple risk management. That's it. That's all I've got for you today. Thank you. See you in the markets whenever I see you. Have a good day. Bye.